Hello, everyone. Y'all, come on in, come on in. Welcome to my video, my YouTube video that is about stock charts, the stockcharts.com, and about charting stocks. So definitely make sure that if you like this video, which I hope that you do, that you'll hit the word subscribe and also see it with your friends. So if you don't know, this whole series is all about like kind of using the best tools for investors and traders. This is what tools that I use. I don't know if they're the best, right? So you'd be the judge, see if it works for you. But if you like this one, make sure that you catch our next video, which is all about heat maps. And then we also have a video on another site that I really, really love, which is Finviz. So hit the word subscribe and go ahead and make sure that after you finish this one, you watch the next one. So for me, I'm all about tools, and I think most investors and traders are really, really focused on what tools are being able to be leveraged and used in the stock market. And so this is one of the ones that I use. It's stockcharts.com. I think it's like $15 a month. So you can check this out. This is the basic member package that I have. And we're going to go ahead and get started. So just to go through it, it has member tools, you know, your charts, advanced, you can save them. I have my account here. As you see, it says Simone Cason. You can change the different way that you view it. It also lists like just as many of the other tools that I use. It'll list what's going on today, the Dow Jones, the S&P, NASDAQ. Dow Jones and S&P, of course, we know those are indexes. Why do we use indexes? Because they're benchmarks. NASDAQ, New York Stock Exchange, Toronto Stock Exchange, S&P 600, S&P 400, S&P 100. As it says, is those are small cap, mid cap, and what have you. And those are totally based on the market capitalization, how big of the valuation for the company, right? And then you can see market moves that are over here. It'll tell you what's moving the market on the Dow Jones and all of that other stuff that's in here, exchange. And so let's get started. So this is just kind of like basic information that is on their homepage. You can always, just like our Finviz video, you can always tweak it to see more things that you want to see. Just like the market overview, if you're buying bonds, buying debt, that's going to let you know that their commodities is going to be anything, you know, that's good, like gold, silver, gasoline, things like that. And then, of course, we have cryptocurrency, right? All right, so cool. Let's get started. All right, so I'm gonna pick the first company that I ever bought, right, in my portfolio, which is Canopy Growth. I think I told you guys this story. That was the one that made me a lot of money. I bought it really, really cheap when it was like $1 and something, maybe even less than that. All right. So the reason why I picked Canopy Growth, because it was a couple things that I wanted you guys to see. If you see here, when we're looking at Canopy Growth, this is the symbol. This will tell us, you know, if we're going in, how you want to do, if you want a sharp chart, if you want how you want to see it, you want to be able to see it with candlesticks and all that other good stuff. That tells you right through here, right? But the reason why I picked this particular company is because I knew that it would come up with two different ticker symbols. And the reason why you have two different ticker symbols is because they're sold on two different exchanges. You see that they're sold on the New York Stock Exchange, and then they're also sold on the Toronto Stock Exchange. Why is that important to you? I will tell you why that is important to you. Because they got two different ticker symbols, right? And the price is oftentimes different. So this is being sold on Toronto Stock Exchange and one on New York. So let's pick the New York one, right? Let's stay domestic. All right. Cool. All right, so let's get started. One of the things, if you are a trader, like a swing trader or a trend trader, this is very, very important for you to be able to understand how to chart, right? And this is using more technical information. Definitely most of the investors use more fundamental information like balance sheets, income statements, and things like that. But this can be used on both ends. And so I just want to show you a few things, just really simply, how you can actually chart use a stock chart. And then of course you're going to evolve. This doesn't, like, Rome is not built in a day. Egypt is not built in a day. So you have to be able to practice and kind of learn. But this is a great technique, right? Great tool to be able to know. All right, so let's look at the chart. So here we go. You got the symbol. This is the period that we're going to use, weekly, monthly, what have you. Depending on your trading style, this is what you're going to be. The day traders use it for the daily, but definitely if you're a swing trader, meaning that you are waiting on the company to swing up or swing down, right? So you're waiting on the swing. That's one thing. Another very similar to that is trend. And so these companies you may hold for 3 days, you may hold for 3 hours. Hell, you might own them for 3 months or 3 years, but you're waiting on the time to be able to enter and how to be able to exit. And so there are some key drivers that we use to leverage that. All right, let's go. So what does this mean to us? After you pick it, so we're gonna show monthly and we'll update that. Here you can decide if you want to save the chart or whatnot. Maybe that's too big. Yeah, let's do it. That was too big. I didn't like that. That was too much. Okay, this is a little better. I think this is good. So we'll do weekly, right? So of course it's going to tell us right here, the ticker symbol, Canopy Growth, where it's sent out, the date and the time that we're using. Of course, this is where we see again, we have the opening, the high, the low, what it was last traded for, how many volumes, and what the trade change is. Of course, we've already talked about this. If you've been watching me, that area is the relative strength index. And so we look in this area to see if something is overbought or oversold. If you're not familiar with that, make sure that you go and you check out my video on FinViz, and we go into that a little bit more deeper. But your relative strength index just pretty much lets you know if a company is believed to be overbought or oversold. And we know that the price of a company is based on the supply and demand. So if too many people have it, you don't want to join in having it, because guess what? That means that it's probably selling at a premium. It is, because so many people have it. And at some point, people will, or investors will decide to sell off. If something is 30% or 30 less than 30, then at that point, less than the number 30, at that point, then it's oversold and not enough people have it. And so you have to either question yourself. One, is it going to be liquid when I want to get rid of it? Meaning that nobody has it, so will I be stuck with it? And then two, but on the brighter side is that a great idea? Is this an idea where we may be able to get in on the ground floor? And just as with it being overbought, do too many people have it already and it's already peaked and it's maybe ready for a sell-off? Or is this a trend that I think it's going to break the support system, break the ceiling, and I need to ride this thing with it? So all of those things are going to be things that you're going to have to ask yourself once you get to the point where you can make really, really strong investment decisions. All right, so let's kick it. Let's keep going. Okay, so we're going to go through the chart and then we'll go through the charting. So of course, MA stands for the moving average 50-day and the moving average 200-day. And that is really, really important. And these are these lines. This is the moving average and the moving average. So this is the 200-day and the 50-day. When the 50-day, okay, so when the 50-day crosses over, it's like we look like it's going now. The 200-day, meaning that when the 50-day is higher than the 200-day, that means that the company is trending up. When the 50-day is lower or going across on a lower end of the 200-day, that means that the company is on a downward spiral, and it means that it's going to. So if it's higher, that means it's hitting the ceiling. If it's lower, that means it's going to the floor, right? Okay. And so that is important because people always ask about entry and exit points. So we'll talk about that a little bit more. Next areas, of course, you can use chart of filters and all that other stuff. You can change the days and the time. The simple moving averages. There's other indicators or whatever, and you can really just kind of play with this and just like FinViz and kind of make it your own. But I want to teach you guys today how you can go in and you can make some charting decisions. So let's say right now we are in a pandemic, and we're seeing a lot of volatility. So for me right now, I think 50 and 200 day might be a little bit longer than where I kind of want to hold a stock that I possibly want to sell short or possibly want to get out of that position. So I probably wouldn't want to handle it for 50 to 200. 50 and 200 days are going to be looking at entry points for companies that I probably want to hold for a little while. But if I didn't want to hold them forever, right, and I wanted to get rid of them soon, I would probably change this to 200 day and 50 day, 20 day and 50 day. And that's a shorter time frame and just a time frame of where I would be able to kind of see a difference, right? So we go in here. We're gonna just hit update, right? So I like the shorter time period. That's just for me, but you go ahead and do whatever you want to do. All right, another thing that I like to do is here, the note-taking session. So this little thing pops up for you, right? And you get a chance to kind of use a couple different things. You can change the colors so your lines aren't confusing. You can use a pointer. There's room for alphabet. You can put a pen in it. All this cool stuff. So let's see here. I'm gonna change it to purple. All right. So I'm going to choose purple. And once I choose purple, which is all good, what I want to do is I want to kind of look at what these trends are. And so the first thing that I do is I create a ceiling and I create a ceiling and a floor, or a support and a resistance. Support is going to be the ceiling. The floor will be the support. Resistance. I'm sorry. Okay. Next, I'm going to go ahead and I'm going to pick a line. So I know that this is the bottom that we have seen from this, right? And I will pull this all the way. And you can move this, make it better. It doesn't have to look like that. There we go. Okay, cool. All right. So now this is where the bottom is. It looks like it's a little bit under $10, $9. So I have created a floor, and for newer people that are just kind of getting in, you might want to put in the text. You could add a note. You might want to say, this is the floor amount, right? Easy. I'll change the color of that so we can see it. And I make it bold. You can even move it over here, but wherever it is that you want to have it, but making sure that you recognize that that's the floor amount, right? We're going to do the same thing again. And guess we can use green. You can use any colors that you want. I don't have, like, some investors and traders, they have like colors that they're like, oh, okay, this is the one that I use. Yeah, me, not so much. Whatever I feel like is what I feel like. So you can decide whether it's going to be horizontal or whatever. And so we're going to go here because that is now our ceiling. Now, one of the things that you got to understand is that when you're trading, in most cases, your stocks, I mean, we believe that the stocks that we're invested in really kind of respect the resistance and the support, or the floor and the ceiling. Doesn't mean that it doesn't break. It oftentimes does break, and we see these breakouts that happen on there all the time. These are all, when it goes farther, it's all breakouts. But until there's a breakout, it's still going to continue a trend. And so you're looking for those ideas, those alerts, and those signals that are going to let you know when a trend is happening, when a trend is continuing, when a new trend is starting, and all that other good stuff. So if you notice, like when we went back, we did the moving average 20 and the moving average 50, right? And so what that told us was a couple of different things. We were looking for trends and ways and alerts and signals for us to be able to get into the market and get into this position. So remember what I said, when the shorter, or before it was the 50, but when the moving average 20 crosses under the 50, that lets us know it's a decline. And you see that here. So we have the moving average 20 and it's crossing under. And so that lets us know that we're in a true trend that's decline, because it's cheaper, more recent than it was farther away. So it's on a decline than it was, a month ago. Other thing is and moving, it's just the price, the average price for that day. So the average price for 20 days, they add it all up, and that's what it is. All right. So just in respect is vice versa if we do it again, right? So the moment, so now we've seen this thing kind of tail wheel down, did not hit necessarily the floor, but it continued to hit the moving average. So we got two alerts that led us. So we were looking for, one alert is, does it hit the floor again, right? Which is the $9, or did it cross our moving average? And both of those, and we saw it didn't hit our floor, but it did cross our moving average. Now, in this time frame, we've seen it actually cross the moving average again. And remember, each one of these, we're listing it, we have it updated as weekly. So all of these are representing a week, right? So now it's moving up towards up climb. Now you got to ask yourself, is this a great time for me to get in? That's going to depend on your risk tolerance. It's going to risk on your risk appetite, and will also depend on what your portfolio looks like, your level of diversification, and then last but not least, what your strategy is, because we're still seeing so much volatility. But if you are looking for a short way to get in and get out, you might just want to use the alert that says, hey, moving average. If you are looking to be able to play the long game, then you might want to continue to look at the company's story and the fundamentals and some other things. But all things being equal, there you go. All right, so what else will we do with this chart? So we got our ceiling and we have our floor. Let's talk about what else we're going to do with this chart. So got my line. What color do I want it to be? As I said, I'm like a girly girl, so I have no, I don't want that color. Hold on. Turn that back blue. And then we're going to, okay, so we choose that. Now we're going to go in and we'll pick another color. So we're doing trends. Okay, so the trend is pretty much, if you don't know, this is a trend. So an upward trend or a downward trend, really, really simply, right? And so those trends are going to be, as I said, they're alerts and they're signals of when you should be considering whether or not you're going to buy and sell and all that other good stuff. So when we look at this trend, most recent, so we had our most recent floor. So let's just see here. I'm going to put that there. But I got some catalysts and some things that I'm going to do. So what you want to do is you want to go in and kind of navigate and isolate where those peaks were. A lot of people don't do this, but I do. And I think it helps a lot for you to really, because this is a blatant trend, but I really want you to determine what you're looking for. And after you get really good, you don't have to do this as much. But as you can see, there's a peak, there's a peak, there's a peak, there's a peak, here's a peak. I'm doing the upward trends right now. Now, I'm gonna change the color and we're gonna do the lower half of this. All right, here's the dip, here's the dip, here's a dip. There's a reason why we're doing this. There's a dip, there's a dip, there's a dip. And then this should be blue. All right, so let me just talk to you about what I just did. What I did was I went in and I isolated where these peaks are and these peaks and valleys. And so what you want to do is you want to be able to really identify a real trend. And able to do that, there's going to be a couple things that you're going to need to do. One of the things is you're going to need to do is identify where these peaks are. And they're not always just as easy as what you can see with your eyes. Sometimes it takes a little bit more to be able to define where they are. And so I always go in and I pick up all of the peaks and everything that's going on to make sure that I'm having a true trend line. So although we can see that it's blatantly up, we definitely want to be able to look at, well, where were those places where it was picking up? Well, we saw that it picked up at it picked at a $35. We saw that it peaked at a $36, and we saw that it also peaked at a $57. Now, there is a method called the Fibonacci method that you could be able to use, and it tells you entry points of being able to come in at different percentages. In addition to that, you'll be able to study and be able to really see where that market trend is going. And so, like I said, it's kind of blatant here, but it's not always as visible as you think it is in other ones. So making sure that you're plotting your peak points is going to be really, really important. All right, so let's go in. Okay, that one, we're gonna choose that. Now we're gonna go in, we'll choose another line. And then now we've seen our upward trend. Now we had a lot of volatility here in this October of 2019. And there was a lot of things going on just period. We saw with the thought of legalization in cannabis and a host of different other things. So we saw a lot of volatility in this October. But then even going forward, there was a big jump in January. I think everybody remembers how the market and how cannabis did really, really good. Okay. And so what we'll do is we will be able to do a trend that will go downward this way and go downward. So we did see that there was a upward trend that was like really, really dope. A lot of volatility, but we're looking at a week, right? And then after it peaked, then we saw a decline. Now this is in 2020. We've seen a bunch of different reasons why there was a decline in the market and in cannabis. Although they were still pot stocks and pot were still being essential in the pandemic, we did see a lot going on. So let's still chart this though. So this is just us doing connecting most of our dots. When we have something like this, I usually just put them in between, right? To chart. I'll change the subject or change the color, I'm sorry. And then we'll do the same thing from this floor to this floor. Okay. All right. All right, cool. So now we've gotten all of our charts actually completed, right? So we've isolated the peak points, we've created a floor, we've created a level of support. You can always go in and label if this is, especially like newcomers, if this is new for you, I would definitely say put that in there so that you know what your lines are. After you get good, you don't have to do that anymore. So I put floor and ceiling, but it can be resistance and support. After you've gone and you've recognized where you've isolated the peaks, the next level is that you're going to run a trend line through it. And as I said before, this company is pretty much easy to see. We can see that it had an up and it had a down, but that is not always the case. So you can always leverage the downwards or whatever. And sometimes it just allows you to make better decisions and see the trend a little bit better. In addition to that, we talked about the simple moving average, which those are the moving averages for the days that you're listing. In a lot of cases, you're going to see 50 and 200. That's great. We've had a lot of volatility. So lately I have been using, especially for swing trading and trend trading, I have been using 20 and 50 day, but you do whatever your style is. With that being said, now I'm clear about where the trends are. Remember, if the 20 day is crossing under the 50 day, meaning that it's less than the 50 day, then it's on a downward climb, it's still on a downward climb. And then if it is over the 50 day, then that means that it's on an upward climb. So you just have to decide where you're going to be. Now, we all want to get into a stock and buy it when it is super, super low, right? So we all wanted to get Netflix or whatever when it came in and bought it at like $1, right? Or Amazon or whatever it is. The chances are of us getting it at that point is like slim to none. So, but you can do the next best thing is that you can recognize or be signaled or be aware of alerts and make decisions of when the company is on an up climb. And that's what the charting does for you. So that's what all of this means. So you want to be able to recognize an upward or a downward trend that will be able to give you a signal or alert or be able to help you make a decision on when you should enter and when you should exit a stock position. So that is chart. That's our stock charts. And so you can do so many other cool things with this thing. I'll teach you guys other stuff, but definitely I would make sure if you like it, please subscribe to our channel. And then if you love it, which I hope that you love it, you make sure that you watch the next video, which is all about heat maps. And then check our previous video out again that tells you more about FinViz, one of my other favorite tools. All right. Of course, it's Simone K. Sinish, your cash counselor, your money problem solver, the dopest chick on your timeline. Why? Because I'm usually talking about money, stocks, and green. All right. I'll talk to you guys soon. Have a good one.